Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 27th of February 2021 and we're publishing our gold and silver weekly update for the week ending the 26th of February. We also briefly look at political and economic events and reports which could shape what happens to the US dollar and therefore precious metal prices. So let's take a look. First, just a quick shout out to two important videos produced in the last 2 days. On Thursday, is a US digital dollar currency a real short-term possibility? And yesterday, gold and silver down, 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 as pumpers predict up, up, up. And we've placed links to both of these below. Now to last week's figures. Gold fell $50 last week from $1,784 to $1,734, having hit a high of $1,816 and a low of $1,717, a fall of 2.8% for the week and follows the previous week's fall of $40. In sterling terms, gold finished at £1,245. That's down £28, and that follows a fall of £44 the week before. And in euros, it closed at 1,437 euros. That's down 35 euros, following a 33 euro fall the previous week. Silver fell 59 cents, falling from $27.28 to $26.69, having hit a high of $28.34 and a low of $26.16, a fall of 2%. In sterling terms, silver closed at £19.16. That's down 32 pence. And in euros, it closed at 22.11 euros. That's down 0.41 euros. The gold to silver ratio fell from 65.4 to 1 to 65 to 1. Bitcoin incidentally fell over $9,000 last week. And its price currently stands, but of course by the time you listen to this it will have changed, but it stands at $46,789. The Dow Jones closed on Friday at 30,932, down 469 points on the day and down 562 points on the week. The S&P 500 closed at 3,811. That's down 18 points on the day and down 95 points on the week. And the Nasdaq Composite closed at 13,192. That's up 72 points on the day, but down 682 points on the week. Brent crude closed at $64.42. That's up $1.51. And WTI crude closed at $61.50. And that's up $2.26 on the week, both of which fell almost a couple dollars on Friday, so those figures would have been much higher than they are now. The dollar index stands at 90.87. That's up 0.51 on the week. Our gold and silver price trading range forecasted for this past week, this is what we said. Quote, this coming week we see normal trading for gold between 1750 and 1850, with 1700 to 1900 as outliers. And silver's a little trickier, as we may start to see some movement greater than $1 to $2 differential between highs and lows. And so we're widening the gap slightly, with normal trading between $26 and $28.50, with $25 and $29 being outliers. Now, gold initially opened up at the start of the week, just as the technicals were suggesting that it should, but it peaked early on Tuesday morning and then gradually declined with a plummet on Friday. Similar was similar though, but it did attempt a number of recoveries during the week, and even attempted a rally late on Friday after a sharp fall, just like gold. Now, looking at gold specifically, it has broken below and closed below a very important 1750 support level. $1,700 is likely to be the next target. And if that is breached, then $1,500 ultimately cannot be ruled out entirely. Equally, if gold can recover beyond $1,800, then it may indeed begin to stabilize. Purely from a technical point of view, the support level below 1,700 rests at the June's low of 1,670. Resistance is identified at the 10-day moving average of $1,787. Short and medium-term momentum has turned negative or is negative, and the MACD is also pointing to lower prices. Silver, as we've mentioned many times, has found $28 too much to breach for long. It's a high resistance level currently, and the general consensus is that silver needs to pull back further before it can attempt another serious challenge. $24 is highly supportive, which is where the 200-day EMA rests, but frankly $26 has to be breached to the downside first. Very few analysts, although one or two have muted this, but very few believe that silver could fall to 22 or below. On the upside, before any significant rise can be achieved, the $30 level has to be surpassed. We're witnessing at present silver suffering from the now lack of monetary demand, at least in paper terms, akin to gold, but is benefiting from the envisaged surge in industrial demand that many are expecting. And as mentioned, this is primarily the response in the paper markets because the physical markets are still quite tight in most areas. US economic data was broadly positive last week, with various home price indices higher. Consumer confidence was up by over 2 points, and initial jobless claims falling from 841,000 to 730,000. Durable goods orders for January were up by over 2.2% compared with December, and personal income rose from 0.6% to 10%. Consumer spending moved from minus 0.4% to plus 2.4% in January, and the Consumer Sentiment Index rose from 76.2 to 76.8. In addition, during his two-day testimony to Congress, Fed Chair Jerome Powell made it clear the Fed will continue to embark on its loose monetary policy until full employment has been regained. And he also mentioned that they were consulting widely on a prospective digital dollar, which we've produced a video as mentioned earlier. Now, looking to next week's US economic data, we've the following to be announced. On Monday, the Market Manufacturing PMI for February, the ISM Manufacturing Index for February, and construction spending for January. On Tuesday, motor vehicle sales for February, and on Wednesday, the ADP Employment Report for Feb, the Market Services PMI for Feb, and the ISM Services Index for Feb. On Thursday, the normal weekly jobless claims, plus productivity revision for quarter 4, unit labour cost revision for quarter 4, and factory orders for January. And then on Friday, the all-important non-farm payrolls, plus unemployment rate, plus average hourly earnings all for February, the trade deficit for January, and consumer credit for January. So truly an important week for data, and concentration will no doubt, as happens every month now, be paid to the 3 separate employment data reports. So where does this leave us for gold and silver prices next week? Well, we're going to assume that the employment data will be beneficial and the other economic data is moving in the same positive direction we've encountered during the past couple of weeks. With that in mind, there is bound to be further downward pressure on gold and silver as it becomes less important from a monetary demand point of view. However, there will be a point at which silver will seriously begin to benefit from an industrial demand point of view. And this, frankly, will be determined, at least initially, by the paper markets, as they will dictate the initial pace, though the physical markets will kick in terms of price determination later. Against this, we also have to weigh up the Biden $1.9 trillion stimulus plan, which passed the House of Representatives and is now en route to the Senate, which has already blocked the $15 an hour minimum wage proposal part of that package. It's not certain the bill will pass, bearing in mind that even the House of Representatives saw 2 Democrats defect and oppose the bill, leading to a passing of just 219 to 212. Of course, the Senate is even more equal. In fact, it's currently 50 senators to Republicans and 50 senators to Democrats, with normally the presiding officer or president of the Senate, in this case Vice President Kamala Harris, being the ultimate adjudicator if there is an equal 50-50 vote. But, having witnessed some defections in the House of Representatives, it's unclear whether this will pass in the Senate. We shall just have to wait and see. So with these factors in mind, we see gold still under pressure and trading between 1700 and 1850, with 1650 and 1900 as outliers, and silver frankly has potential in either direction this week. So our range is marginally wider than usual. Normal trading we still think is going to be somewhere around 26 to 28.50, with 25 to 29 as outliers. We certainly don't see silver rising above that figure, but then we don't really see it falling below 25. Now tomorrow we shall be publishing episode 13 of Bitcoin versus Gold and Silver, and once again this market truly is very exciting. And some are asking, was the $58,000 peak that we recently saw going to be it for 2021? We suspect not. But what do you think? Do share your thoughts. Thank you for listening. If you haven't already done so, please subscribe to our channel. And as usual, have a safe, enjoyable weekend and prosperous week ahead. We hope you have found this video interesting and informative. And if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.